Lululemon slated to report results after the bell this afternoon. Tried a lot of options interest already today, but one large trade stands out. Is it a warning or the makings of an offsides opportunity? Joining us now is Mike Khouw, chief strategist at OpenInterest.Pro and a CNBC contributor. What is unique, Mike, about this trade ahead of the close and today's results?
Yeah, so right now the options market is implying a move of about 10% or so by tomorrow's close following earnings. And that by itself isn't all that surprising when you consider that the average move over the last 8 reported quarters has been about 9.5%. Today, we've seen more than 2 times the average daily options volume. What's interesting to me is, other than the fact that the top 5 most active contracts are all short-dated puts, is that the September 210 puts are the single most active contract. Now, those are 20% out of the money to the downside, expiring on September 20th. And we did see about 1,300 of those trade in the first hour and a half or so of trading for about $1.60 a contract. So buyers of those are obviously expecting a big downside move. And a 20+% downside move a month out from earnings has only happened about 4 times in the last 44 reported quarters. So that'd be a relatively rare event, I would have to say.
So this trade is buying into the idea of a rare event. If you wanted to take the other side of it, how would you do it?
Yeah, and it's interesting you mentioned that, because I kind of do want to take the other side of it. I'm rather hoping this institutional trader who is buying those puts isn't right. I mean, look, this thing is trading around 19 times trailing earnings right now. This is about as cheap as we've ever seen this thing. And that's despite the fact that they are still growing, albeit a lot more slowly. I think one way to play to the upside potentially and basically looking for a reversal here would be to buy some longer dated call options and then sell some nearer dated calls against it of a slightly higher strike. We call that a diagonal call spread. I think that's a way to take a cautiously optimistic view. Look, I mean, this thing's trading around the same turn right now as Nike is, but their basically returns have been on a fundamental level far better than Nike's have been. I mean, since the pre-pandemic numbers, they're up about 128% in terms of top-line growth versus 20% for Nike. Of the two, I'd rather own this one.
Getting away from the technicals of the trade, I have to observe, I think, that Lulu's moment may have been past because people are going back and wearing jeans again.
Well, it's interesting. I think it's not just a jeans thing. Vuori, which is sort of an up market athletic apparel thing. So they have really caught a lot of people's eye. I think a lot of people sort of migrated to that. So Athleta has picked up some of Lulu's business on the downside. Vuori, I think, picked up some of it on the upside. But the thing is, Vuori doesn't have quite the number of SKUs that Lulu does, so I think that still gives them support. And people who like their product and still use them, I mean, they're good for that. You can't wear jeans for your athletic activities, or at least you shouldn't.
Mike Khouw, thanks very much. Yeah, they won't let you into the golf course wearing denim most of the time. Mike Khouw, thanks very much.